my YouTube. So okay, it's going live now. Apologies for those of you that are following on YouTube. I just started it now. We've been going 20 minutes, so you missed the economic part of it. So we're going into crypto. Now, first of all, before we go into this, let's have a look, as usual, at Bitcoin and where we are sitting. So just moving the controls. So this is where we were 2 weeks ago. Let's have a look. This is a 4-hour chart, okay? So we were about 7th of September. The last session we had was we were about here, about 25.5. Okay. So what happened is that yes, the market went up slightly. Now it's coming down. But really, when we scratch it up and we look at the bigger picture, you see. So we're still in the kind of a holding pattern. Yes, we hit the bottom in November 2021, and then we had we started an uptrend. But it is, every move, obviously, is fairly measured and it's fairly lengthy. So this the latest move was started in June, the mid-June, and as you can see, we tested the lows a couple of weeks ago, and now we just bounced back off the lows. But we're still in this pattern, okay, and we're still fighting against. So we reverse the trend. So we go from a downtrend now to an uptrend, but we're still fighting against some headwinds. So this blue box that you see, it's the resistance that we're facing at the moment. Say when we find some reason for the market to have some positivity and to break the upper limit of this band, which is about 32.5, then very quickly we will move to about the 38 to 42 range. Okay, but when this is going to happen, then remains to be seen. So what are the reasons that could get Bitcoin or other cryptocurrencies to to go up and to go to 40, 50, 60,000, and we'll see, maybe to establish new highs? So there are mainly two reasons. Okay, one is speculation. So people getting excited, say bull market where everybody thinks that, yes, I'll buy crypto because it can make me money very quickly. Okay, and this is what happened in 2020, 2021, and it's one reason, and possibly the main reason why a lot of people got interested in crypto, unless they were already in the community. Okay, that's reason number one. Reason number two, which is speculation. So it's funny because you will see a lot more people will be willing to buy Bitcoin at 40,000 than they were willing to buy at 15. Now, it seems difficult to understand, isn't it? Because there is that, here, oh my God, everything is bleak. It keeps going down. And then, as you can say, we all are, the human race is follow the sheep. So when everybody's doing the same thing, at the last time, when it's at the maximum, oh my God, Bitcoin is hitting new highs, I need to buy. Okay. And this is the way we do things. We panic when things are going down, and we overexcited when things are going well. So that's the way that things go. But so one of the reasons is the FOMO, fear of missing out. So people think, okay, yeah, Bitcoin is going up by 5%, 10%, I need to buy some. The other reason is increase utility. Okay, so people using the cryptocurrencies because they can do things with it they cannot do outside of the cryptocurrency system. And this is what I tend to look at, and what I think Jonathan is on the call now, and what Jonathan does as well in his crypto session, the crypto Cardano session that he does every Friday at 9:30. Which, this is, by the way, Jonathan, this is a clue for you to post the link in case you haven't done it already. And so we look at the reason why you should be using crypto, not so much, buy crypto because you can make your money in 2 months' time or 3 months' time or 2 years' time, but really, why are people using crypto and what it can do for you? And now we start living. I've got a few things to show you that are pointing in that direction. And this is like the main economic players that now are talking about blockchain and cryptocurrency as and they're interested in it not just because of money creation, so they can become richer than they already have, because they can they can make enough money with the current system. They don't need a new system to to make more, but because they will be allowed to do different things that at the moment are not possible to do. Okay, so first of all, before into going into that, we'll talk about that in a second. Let's talk about, as usual, let's start with being careful about your funds. So this latest one is a phishing scam on Kraken users. Okay, so again, the way that they do it was slightly different. Normally, they're saying, "Oh, be careful with your seed phrase, giving anybody access to your account." But also, you need to be very careful about with your wallet about what permissions you give to particular providers to use coins in your account. Okay, so you have a private key that's protected by encryption, but fraudsters can get to your funds without user seed phrase. This is when you opt in to participate. For example, in this case was a fraudulent mining pool, and then basically clicking on a button that initiates a request for a network fee that typically range between $10 and $50. But there are ways. Basically, sometimes you give the system that you're using permission to use the funds in your account, and sometimes they keep using these funds again and again and again. Okay, without you realizing it, because you are giving the app that you're using permission to do certain things. And in this case, with this system, they managed to scam more than $4.5 million. Okay, so do double check, treble check anything you do when you got your own wallet, because there is no admin that you can go back to and thinking, well, why has that happened in my wallet? You are responsible for your wallet and nobody else. So if you do something that you shouldn't be doing, you can end up losing a lot of the funds in your account. So be very careful about who you give permission to, and revoke permission if you don't need to deal with certain apps that you were maybe experimenting with. Just revoke the permissions that you have given these apps. Okay. All right. Now on different things, we're seeing both in the US, in the UK, in Europe, that there is kind of a legislation coming in to restrict what crypto firms do. So what is happening, and what I've told you before, what the result would be with a lot of these things is that many firms are looking outside of these jurisdictions to set up their working their working companies, because no company can work in a system that is not where they don't know what's happening from one day to the next, pretty much. Okay, so this is happening in the US. In the UK, we had the FCA that published a set of rules that all crypto firms needed to adhere to. Pretty much almost nobody has replied to that requirement. So what is going to happen to the crypto firms in the UK remains to be seen as well. Europe is enabled a system that puts the same restriction on crypto as it does on cash recently. So it's a kind of, at the moment, is an uncertain time for cryptocurrencies. But from the other point of view, now this is very interesting. There is a bill going through the House of Parliaments in the State House of Representatives to stop the Federal Reserve from issuing a central bank digital currency. Now, this bill has gone through the committee state and now will proceed to a congressional vote. Now, it doesn't mean that it's going to be approved, But they said that they got support from over 60 members of Congress. Now they need a lot more than that to pass the bill. It's interesting now that this is being openly discussed, and there have been lots of representatives actually supporting something like this, because there is, growing disquiet that, especially with the cases that SEC has against Coinbase and against Binance, that they are basically increasing their powers without any check, because these organizations are supposed to apply laws that are being passed by Congress, and many judges now are returning saying, well, you haven't proved the case that, for example, the all cryptocurrencies are securities, as the SEC is alleging in a lot of the cases that they bring. And yeah, for example, in there's a case of Binance that the Binance CEO has actually filed to dismiss the SEC case, and in particular because the action. So the SEC recently brought several enforcement actions, including this one, premised on its new position that virtually all crypto assets and virtually all crypto asset transactions are securities. And now this hasn't been proved, because there isn't any law of the land that establishes this, this that then could be enforced. But this is down to Congress to legislate. And so we'll see where this goes, because that will define how crypto firms can legally operate in the US. So I mean, from my point of view, I think that we will get to a point where Congress needs to legislate about this, because they are losing market share basically in cryptocurrency, and it is a kind of like a multi-trillion-dollar industry. There is poised to become a lot larger. And the one thing the US doesn't like, it doesn't like to lose influence, economic influence in the world. Okay, so this in the future is going to happen. Which form this will take remains to be seen, because the Biden administration has been very, let's say, against crypto as such. So we will see once legislation comes in, if it's still possible to operate in the US or not. On the other side, the Wall Street sees blockchain technology as a game changer. And in particular, this is talking about this 5 trillion worth of assets that could be tokenized on blockchain by 2030. And especially, when you're talking about, mainly here, Wall Street is talking about securities, but also think about property, in a way that if property can be then divided into shares the same way the companies are, you would be able to trade into bits of properties the same with the same ease of transactions as you do for stocks and shares, for example. And that would free a multi-trillion market that at the moment is, for all of you that deal in properties, the one thing that is that it's not a liquid market. So if you need to buy or sell a house, it varies depending on where you are, but generally it's not something that you can do in an afternoon. It would take several weeks generally to complete a property transaction. With tokenization, it's something as easily as going on an exchange and buying and selling bits of properties, which could be again properties that you wouldn't normally have an access to. Because, if you're thinking about, in the UK, for example, you play Monopoly, all right? So that what's the most expensive card on Monopoly? There is like Piccadilly, I think, isn't it? Or Mayfair, one of those two. Okay, so we wouldn't generally, as a normal, not a billionaire, you wouldn't be able to buy a property on Piccadilly. Okay, but if it was tokenized, you could afford to buy shares in a property in Piccadilly that represents a very small holding in the property, because although you only maybe have, I don't know, let's say £5,000 to invest, which wouldn't buy you anything in Piccadilly, you could then invest in a tokenized part of a property that will give you access to the same capital growth as if you had invested millions. And this is all about this. This is what the now big players in Wall Street are seeing, because that would obviously improve their bottom line as well, because they would have a lot more assets that they can trade through their books. Okay, so in this case here, we're talking about debt in particular, okay, because even debt is one of the things that can be tokenized. So in general, talking about a corporate and almost sovereign debt and private equity and venture capital that could be tokenized. So this is a very, very interesting development. And the other thing here, that is actually somebody's put their money where their mouth is. Okay, so this is Standard Chartered. From many of you may have dealt with it in the past, especially they're very active in Southeast Asia, although it is a UK bank. They now rolled out a new service that will enable crypto investors to generate passive earnings from the digital assets. Okay, so they struck a deal with Open Eden for the custody yield program that will provide staking services to institutional clients. Okay, and as I said to you before, things like this and things like exchange traded funds in cryptocurrencies are all things that make investing in cryptocurrency easier for institutions, because institutions don't really want to have to deal with the complexity of moving large sums on their own wallet with the risks that involve, but they want somebody to deal with that for them. And in this case, having somebody that deals with the risk of all that, and we have security, banking security behind it, it could be a big step. So you can see that, on one side, you got everybody like talking down cryptocurrency, trying to push the prices down. But on the other side, in the background, the actions they are taking in the background is actually investing a lot into blockchain technology. So there are kind of like the real waves that are coming in are these. Obviously the hype is not there yet, but we know that in particular talking about Bitcoin, we know that something is coming next year. So what's coming next year is we're going to have the Bitcoin halving event. So the halving event means that the rewards that are given to the miners are going to be halved. Okay, that means then what happens, what does it mean in practical terms, is basically the inflation rate of Bitcoin goes down. Okay, because at the moment, until all Bitcoins are mined and until we get to the 21 million, Bitcoin still has an inflation rate. Okay, because when new Bitcoin, they're coming into existence every time a new block is produced, every 10 minutes pretty much. So if these rewards are being halved, also the rewards they are getting, so the Bitcoins they are getting into new Bitcoin they are getting into circulations are reducing. So the supply will reduce, and if the demand stays the same or increases, that's when we have generally an increase in the value of Bitcoin following each halving event. Okay, so remember about all these things that are happening at the same time. And if we look at just go to a daily chart, okay, so we look at a long term rather than just focusing on what's going to happen tomorrow. If we look at kind of like a long term trends, you can see, again, this chart only goes down to 2017, but but literally speaking, you see that every time we have a new bull run, and again, this is kind of like every 4 years this happens roughly. We setting new standards, new levels, and then when we go down, we rarely actually revisit the bottom of the previous range. We just end up just about being able to touch you know, to touch the top of it. So, you know, once the next impulse will happen, this here, then it will represent, you know, the new probably the new bottom of the next phase. Okay, so if this was the previous high, the new high would be a percentage increase on that, and that would represent a very very strong support for the next wave. Although, you know, we have still a long way to go before we get there. Okay, so we are kind of like a third of this at the moment, but long term, we are now gone through, let's say, the Bitcoin winter. We have over kind of like over 2 years now from the top of decline, and then kind of like a limited bounce. So the one thing I will say is definitely not a time to sell the Bitcoin, your Bitcoins right now, but it's something you know, to think of for the future. Just look at your total investment plans and other asset classes, whatever. I would say that, you know, having a portion of your investments in cryptocurrencies is definitely at this moment in time a good thing to have. But just remember that you are investing in a, you know, in an area that's still very new, that's still got an elevated level of risk attached to it. So whatever you buy in cryptocurrency, make sure there is comparable in terms of quantity to your total assets. Okay, so don't put the majority of your assets in cryptocurrency. Just have a, you know, just invest with your normal investment strategy that you use so far, but just allocate something to cryptocurrencies as well. Okay, so pretty much I think these are the news that I want to. I think I've shown you all the ones. Yeah, all the things that I had selected, you know, today. I would say really in these past couple of weeks, not much, you know, new has come into the world of crypto that has, you know, that will change things completely. But just remember that, you know, we've had a now over 10-year, you know, 13-year history in cryptocurrency, and a lot of this time, you know, during a lot of these history, prices have gone down. You know, so they haven't just gone up. So, you know, on average, you know, the prices that kept going up at a high rate, but, you know, things start happening, carry on happening as well from, you know, the last 2 years. There's been a huge development, even if, you know, the prices of all cryptocurrencies have gone down. Okay, just remember that and concentrate so much when you look at your cryptocurrency. Just have a look at some. CoinGecko, one of the aggregators. Yes, I am human. The last time I checked. Okay, so, you know, when you look at the cryptocurrencies, don't just concentrate too much on, you know, are they going up, are they going down, what is price doing right now? But think about, you know, just read some news, start digging deep and thinking, okay, which are the networks, you know, where there is you know, meaningful development going on. You know, where is the work being done, and what could that do? You know, if you look at 1 year, 2 years, 3 years down the line, you know, just start thinking, okay, what could blockchain or cryptocurrency do that is not happening already right now? Okay, and if you once you've found, you know, exactly the area that you think blockchain technology could improve, then start looking, okay, who's active in that area, you know? And as I said to you before many times, just start. I know that you might not know a lot about crypto, but start from what you know. So if you go here on cryptocurrency and select categories, you know, there are so many different categories here, and definitely one of those categories will be close to something that you already know through your work, through your life, something that you are that you become either an expert or that you know pretty well. Okay, so if you start going through the category and find one that you like, and then go and have a look and thinking, okay, what's happening in that sector? Whether you are, for example, in the tourism industry, okay, who are the players in cryptocurrencies, in the tourism industry? So are these currencies doing anything meaningful? For example, these tokens that could improve the way that people do experience tourism, for example. Okay, so this is just one example, one of the categories, and you can see that all the companies here are really tiny. Okay, the market cap, the biggest one is $33 million, so it's really small from a crypto point of view. And you can see the numbers here. This is the number of by market cap. This is number 491. So it's not, just bear that in mind when you look at your companies. But it's a way of using your normal life experience, and then you'd be surprised about what is going on and how this technology can improve things that are already existing. And it could be like booking hotel rooms, or it could be I don't know, whatever, governance. It could be decentralized exchanges. It could be construction. It could be gaming. So TriumphI could be insurance, for example, banking and insurance. How many people here in London work either in banking or insurance? I'd say a lot of the, I would say a lot of the white collar workers work in those industries. So see what's different. Okay, so I've pretty much covered, I think, most that I wanted to cover today. So let's go to stop sharing and see what we got about 10 minutes, whatever. So do we have some questions? And we see here that the Jonathan actually has posted the link for his session, which will start in about half an hour. Okay, any questions here that you have? Eric, go ahead.
Look, you were interested in the gaming industry, and I learned from you about some gaming platforms. Is there anything happening there, or is there any developments there?
Yes, yes, there is, but it doesn't quite translate it into higher prices. So the difference is between now and a couple of years ago, pretty much each new game that comes along has a crypto element to it. Okay, is not the major part of gaming yet, because obviously there are huge franchises. They're kind of like big on their own terms. Something like Fortnite or something like that. It's not just a game, but it's evolved into pretty much a metaverse. But the prices of all these new categories, it would start growing once there is volume coming into crypto. And again, now we are kind of like at the mercy of the general economic situation, because the money that will be going into alternative investments like crypto is. So we got to recognize what it is first. Okay, this is an alternative investment, whether it's in Bitcoin or whether it's in gaming, like Gala Games or other gaming tokens. That is money that comes from somewhere else. So the biggest thing that happened in 2021 was that during the crisis, there was in the US a stimulus check. So everybody received money. And obviously, if you already find some people needed it to buy food, okay? But if you already had a job and you didn't need the extra money, a lot of people put it in alternative investments. And this is why crypto had a big boom. At the moment, the money in circulation is getting less, it's not getting more. Okay, so this is why prices have been subdued for so long. And personally, I think that the next bull cycle will start hitting once we start seeing an easing of monetary policy. Okay, and as I said, the big talk about this week has been no increase in interest rates really, but has been like we're going to keep the tightening for a longer period of time. Although we probably have hit the top level interest rates in the major economies. This now is going to be kept for much longer than initially thought. So now they're starting to revise their projections now. So where they're expecting, the central banks were expected to start cutting towards February, March of next year. Now this is probably going to be longer. And I got my rabbit here that's getting nervous because he wants food. So I've got to be careful because it keeps nipping at my ankles. It can be quite sharp. Okay. Is that clear enough? Yeah. Carol, you raise your hand. You need to unmute.
Look, because I was sort of stepped aside for a little while, I haven't really got myself across the Binance situation. Now, I know there's some actions against them and problems in Australia and whatever. That's the exchange I generally use, and I do still have some smaller holdings on Binance, just leaving them on the exchange. Should I be changing that? I'm not really across what I should do.
Yeah, generally speaking, there's two reasons to keep coins on exchanges. Okay, one is if you want to buy and sell. So the reason to keep them on exchanges is because it's easier. In exchanges, it's a lot cheaper to buy and sell than it is on your own wallet. So for small holdings, I have many of my small coins, like the speculative coins, on Binance as well, because it's really they're not big amounts. So sometimes I can't be bothered to actually move them out. But any long-term holding should be away from exchanges, should be in your own wallet. Okay, for security, because we're seeing what has happened to a variety of projects, to FTX and to Voyager and other places like Celsius. So your funds are not safe basically in your wallet. Doesn't matter who the provider is. This is a private company. Something can happen to them. Okay, especially in crypto, where we've seen that some of these companies didn't really have good systems in place, and that was the reason why they went down in the end. And if from the point of view of Binance, I know that they have many cases against them, but the main things are against Binance US. Binance International is a different company, okay, and they are still the major provider. They started providing proof of assets as well. So I don't think there's any immediate risk, but obviously there is a risk with those changes. And I mean, if your tokens you intend to keep for a long time, then transfer them out into your wallet. If you're just thinking, well, I might sell in 2 months or whatever, then you might as well leave them on Binance. But I would say anything that start being like 4 or 5 figures should be definitely in your, in your wallet if you're planning to hold in more than a couple of months. Okay. Oh, by the way, I know that, I mean, I don't know what Binance is like in Australia. In many countries, it's now difficult they've taken away, they basically unbanked Binance from many countries. Okay. So they're not allowing people to send money from Binance to their own bank account. Doesn't mean that you can't use Binance. You can still use it because it's still the best exchange to use. But what you can do if you want to take money out is simply you just send the crypto to one exchange that's okay in your country, and then you take the money out from there. And like, for example, here in the UK, if I need to take money out from a Binance account, I'll transfer the money to Kraken, and Kraken is no problem with, is well connected with the banking system here. So I'll then cash out from Kraken, for example. And I know that you're in Australia, aren't you, Carol? Yeah. So probably in Australia, most people use independent reserve as well. So you can, and also Kraken as well has got good regulatory position in Australia as well. I know that they, depending on the bank. I know, Tim, you were saying that you had it was well connected to your bank, so it was easier for so I don't know if you want.
There was something negative about Kraken today in Australia. There's something against them now, so I don't know what's going on.
Yeah, it's at the end of the day, you know what? With central exchanges, you can open accounts even if you don't have no funds with them. So the only thing you got to know is that you got to know that you can, that the exchanger you use, you can use to transfer funds to your own bank. Because, and then when you want to do it, the money that only needs to be there for minutes. It doesn't need to live there. Okay, so if you find an exchanger works with your bank, then whenever you want to, to use to cash out, then transfer the funds on there and as crypto and take it out as cash. Okay. Okay. Any other questions? Otherwise, I will get Jonathan to do a comment on. Jonathan, do you want to? I know that there was a lot of talk this week, on social media about Cardano's TPS, or transactions per second.
Mm.
Do you want to enlighten everybody of why and why there's a lot of commentators just don't get it?
Yeah, it's a blind spot for the crypto legacy. So the understanding about transactions per second, TPS, is the big metric that everyone should look for when they're deciding on a crypto chain to work from. Is that you can process more transactions, you can work more quickly. So it's a bit like using Visa or MasterCard network, the SWIFT network, rather than waiting for the post office clearing system with checks and paper. And they're trying to do that based on the actual number of transactions that fit within a certain time period. The problem with using that metric against Cardano is that Cardano is actually able to do hundreds of transactions within each transaction. So the idea being that you can aggregate all your transactions together into one efficient pot and then send that with your TPS, and they're getting something like 12 transactions per second according to the old metrics. But if you then multiply that by 100, suddenly you've got a far faster chain. And this is all using the same underlying technology as designed within Bitcoin. The raw unlightning network version of Bitcoin, the old original, really robust, really secure, extended or UTXO model, it's called, for tracking transactions, which is the gold standard. And Cardano uses that standard with some extensions to allow it to do a bit more utility. So yeah, there's really no point in discussing TPS when it comes to Cardano, because it's an unknown. When you got a multiple of 1,000, 200 to 1,000 times what the figure that's quoted is, then it's an irrelevant metric now. So
Because, and the problem is that this so kind of researchers so much, they came out and say, well, the transactions per second in Cardano are not enough for future users, okay, and say we got to improve your network. Well, that's that then ruffles a few feathers. They were thinking, well, actually get your facts right before you start talking about it on as a fact, because you don't understand how and these are all the details, unfortunately. They're not immediately understandable. Even when you look at crypto news, you got to be very careful, because a lot of people are, I mean, I don't know if you've seen this, but generally speaking, I've seen in the past 10-15 years, even in normal news, they're very, very superficial. And people just regurgitate things that they get from news agencies without really considering. And the same thing is happening here. People get a number, oh, look at that, Cardano bad, or look at this is great, without actually understanding what it means and the difference between different networks and the way they work. So that's the kind of looking at the details, unfortunately, is something that needs to happen in crypto, because it's an area that's still dominated by VCs, virtual capitalists. They are trying to push their own narrative to make quick money. Especially careful you have to be when we get through the next bull run, because you will get it from everywhere. You can see, I don't know if you noticed that in 2021, all the social media influencers, all the YouTubers were talking about, you can become a millionaire overnight. You can they disappeared. You don't see them anymore. or they're talking about different things. They're changing the way they are talking, because obviously you realize that is not quite possible right now. Okay, but the moment we're starting to get some, Bitcoin hitting maybe 40,000, they'll come back. They'll come back from the woodwork, and start saying again, yeah, buy now because you can become a millionaire overnight. But still, nothing beats doing your own research, guys. So the only thing that we're trying to do, both for myself and I think I can speak for Jonathan as well, is to highlight interesting things, and then you should go and look at yourself, okay? Because we're not a substitute for your own work, but we just help. Maybe we can help to point you in the right direction, okay? So that your efforts are actually well spent. And then we'll leave it down to you. Okay. So obviously if you keep coming and watching us talk, is because you find some utility in what we say. Hopefully that carries on for a long time. And I would say good luck. Go out and multiply. All right. So it's past 9 o'clock now. So we're going to end it here, unless there is something I haven't covered that you want to ask. Otherwise, we'll close the call right here, and I will see you again next week.
Great.
Okay.
Thank you very much, Luca. Thank you.
All right. Goodbye, everyone, and have a great weekend.
Thanks, and